And Josh here, fellow master gardener, just wanted to send you a direct message. And man, I know you're busy, but I'm out here on the tractor doing some grading, so I have some time to think. And I've really been thinking about Wyckoff, but I'm coming around to this idea that I need to Wyckoff and that I need to do it probably regularly and probably make it a part of my kind of crypto routine. And I've actually brought Casey into the conversation as my wife. She's not. I think she's a little confused because I said, "Hey, I'm going to go in the office and Wyckoff a little bit," and I don't know, something changed. She didn't like that. I don't know what about that was um, caused her to get upset. I mean, I've been doing crypto for a while now. She knows I like to go in the office and look at charts. But when I said I was going to go Wyckoff, she really hasn't said much since. It's been 2 days. But man, if you have any tips on how to talk to her about Wyckoff, one question I had for you, did it help when you recorded yourself when you would go Wyckoff? So, one thing that struck me was, your partner and everyone knowing what you're doing and you putting it out there for everyone on YouTube, obviously, um, you know, that's kind of your claim to fame, man. People love to watch you Wyckoff. And so, um, that's one thought that I had. I'm not a YouTuber and I'm not super comfortable, you know, on video, but would that help? Like, would that help KCC? This is something I'm trying to do for our family, right? This is something that I believe will help us to get where we need to go. And so if I'm going to Wyckoff, should I make a video? Um, I don't know, send it to friends and family. I don't know. But that is one thought I had. So, what do you think of me using video as a way to um, maybe make this thing a little more credible for Casey?
Hey Josh, another great question, man. And you're right. I think now when I Wyckoff, the camera is really a part of it. I don't even think about it anymore. I mean, for me, the thrill is now knowing that when I make a Wyckoff video, there's lots of people watching and they get to Wyckoff along with me. So I feel like I'm helping the overall crypto space relax. And I think if you start making videos and sending them to your friends and family, you'll be doing your part. A few tips though, if you're going to Wyckoff on video, just make sure you're prepared. I've learned this the hard way. The ups and downs can really wear on you, and all the emotion can make it really hard. So make sure you have your tissues ready because a lot can come out, and if you're not prepared, there's nothing worse than being stuck to your keyboard all day. So I'm actually about to make a video for YouTube, so it's funny timing. But yeah, man, I wish you the best. Thanks for your questions, and I'll talk to you in the garden. Cheers. Oh, hello everyone. Oh, the things we do. All right, we have a big episode today. Big episode. Up front, we had to cover the Wyckoff jokes. I mean, they're just low hanging fruit. So let's check that off the list. That was my buddy Josh. We'll be hearing from him later. Yeah, wyking off in front of a camera is just, it's amazing. You guys have to try it. I was not expecting that my year would end with me saying things like that to thousands of people, but life is kind of weird. But right now in this moment, I am doing great. So the spark, I feel the spark in me. I feel this excitement to continue this pursuit of uncomplication. I know the things that I will do. I will always come on here and be honest and tell you the things that are on my mind without any hidden agenda. And what I won't do is I'm not going to let this turn into anything other than what I want it to be. And what I want it to be is just the pursuit of uncomplication, simplifying our lives. So in that, I am asking for your support. If you have appreciated this channel this year, if you have gotten value from this, let me know in the comments, which of these concepts is the most in line with how you feel about uncomplication. But I'm adding a tip jar in the comments of every video. Is just addresses. You can send, $1 in Bitcoin if you want to. So I haven't taken a cent from advertisers or anyone else. And if you want to drop something in the hat to help me keep going, that's awesome. But let's frickin' dive in. All right, crypto market. A couple ideas that I just want to pull from those other videos is that when I look at Bitcoin specifically, and crypto in general, and look at it. Let's look at it on a log scale, and let's go back. Let's go to the BLX. This gives us kind of the longest view. Oh man, this is where all my crappy drawings are. Woo, look at those. We'll just keep them. And the thing that we noticed right away is that it has been just cruising up and to the right since its inception. And we have these moments of giant parabolic moves and then crashes and then a climb up out of a bear market into another big bull run, into another bear market, another bull run, another bear market. So when we look at a blow off top moment like we had in 2017, 2018, and compare that to this year, I see the fingerprints of maturity. When you get into those types of markets, you have lots of different interests that are all competing, trying to make money off of the moves of that market. And because of that, you get an attenuation of the volatility, because when there are relatively few big players and everyone is unsophisticated and just chasing the moon hype, you can get this parabolic blow off top. Everyone believes the narrative. Everyone thinks that Bitcoin is going to the moon, and you can have a 540% increase in a matter of 90 days in a less mature market. Or in 2013, 2014, we had a roughly 1,000% increase in 50 days. And so this type of price action is actually a lot more like what we see in altcoins. Although altcoins happen on a much shorter time frame, these types of structures are very familiar. So if you look at a chart of the price of, let's just say, Ethereum Classic from earlier this year. Ethereum Classic is not a place where you have large institutions setting up shop and trading with bots and algorithms. This is just a largely consumer-driven asset. And you can see if we just grab, let's just go from like this move just to show like this parabolic concept, right? So here's a 1,500% increase over 40 days, right? And then once it gets to this big peak, then there's a huge sell-off and then a crash down. And I mean, this looks almost exactly like the Bitcoin chart that we were just looking at. So here's our Ethereum Classic moment, almost exactly. And then the next time around, we actually have a few more little stages on our run up. And I always think about these like climbing a mountainside. So when you have these corrections, it's almost like a little base camp. When there is a little accumulation window, it gives people these targets that the market is likely to come back to. And so these then form the structures that we see later on. It's almost like everyone's kind of leaving their stuff there before they go higher on the mountain. And so when they come back down the mountain, a lot of these previous bottoms are places that we retrace back to. Here's another one. That's another place that we found a bottom again and again. So these are called lines of resistance or support. But it's just that reality that when you kind of put in a bottom and you have longs that are open here, and then when we come back down, we can find support. But this is very, I don't know, not very, but it's quite a bit different from the parabolic type action. And so now where are we? If we look at the structures of the market, everyone is expecting, or not everyone, but that's hyperbole, and let's look at hyperbolics. The hyperbole of the hyperbolics is coming into this, everyone was expecting that same, kind of, wow, we're going to have a big blow off top and then we're going to come back down. And instead, we had what we now know is a textbook distribution, followed by a textbook accumulation, followed by another little redistribution, followed by a pretty significant fake out, followed by a squeeze, and then another distribution moment. And now we're kind of hanging out on, the precipice of Are we going to have another kind of squeeze and another shoot up? Or are we going to actually have our fulfillment and breakdown for another longer accumulation? And my point here is that these are just different structures. And if you're in the market and you're following the same type of hype and narrative and craziness that has been the staple of crypto previously, I think that you're going to have a harder time than if you start to see this for what it is and to start recognizing that we're not going to know where price is going to go, but we can start to understand who's actually playing here. You know, we were so excited as a crypto community that institutions were arriving. Institutions are coming in. Oh, these institutions. And that's what's going to drive up the price of Bitcoin. And it has. But institutions play by a different set of rules. They're not there just like FOMOing on the button and saying, oh, crap, Bitcoin's really valuable. We're just going to add 1 billion of these to our cash balance or our balance sheet and then just wait for it to go to the moon. The real investment entities that are in this space are now playing it like any other market. And let's just go to, I was thinking of this earlier. Let's go to another type of stock. Let's just compare this with some other assets that are traded. But let's take a look at, so here's the S&P 500 index. And let's just take a look at some of the structures here. And this is an index, so this is a lot of stocks all together. But as we know from Richard Wyckoff, we can look at this and think about it in the lens of the composite man. And we can see that there are, as we've been moving up and to the right, similarly, we do have these moments of apparent accumulation windows, and then distributions, and then, perhaps some smaller reaccumulations, larger distributions, bigger accumulations. And what we see here is just this kind of, working our way up, right? And this is over a much longer time frame from 2019 until the present. But, this is, I don't know, this to me is more how I would expect a very stabilized market that is still increasing in value to move. And it's these little sine waves, right? We have these big crashes. I mean, here's COVID, Corona, the pandemic, however you want to think about it. And we had, what was previously just these little waves moving up. Now there's this big correction kind of resetting, and now we're working our way back up. So my point here is this, in my mind, is sort of like what maturity looks like. This is a market that is full of players globally that are all, trading on different stocks using the tools and techniques to do so. And if we look at the Bitcoin Liquid Index again, and I'm really trying to make a prediction, my feeling is that we are on a large time frame. We are moving from the type of hyperbolic blow off tops with that kind of crash back down, long accumulation. The next time we did it, we had a few more kind of structures, and we had a little bit more observing of those previous levels. And now this time we've got a textbook Wyckoff distribution, and then a textbook Wyckoff accumulation, and then another little distribution accumulation. This is not to scale, but my point is we're going from the Ethereum classic model towards the S&P, very, very tight, very controlled, a regulated type environment where we're going up and to the right. I think that we're in a phase change between those states. And so if I'm looking at the price of Bitcoin today, I think that we are, maybe there's another cycle in here. Maybe there's another bear market in the way that we've traditionally thought about it in crypto. But I'm just going to draw some lines here. I mean, don't go making orders based on this. This is not financial advice. This is just kind of what I'm thinking. If we add a few lines here, let's just do some horizontals for where these big critical moments have been. Here's the previous market cycle top. Let's just add a couple of these just so we have some structures to think about. Okay, so if I'm making predictions, always a dubious task. I was thinking about this, and a few points that I wanted to make. First of all is that you can look at the volume this year, and you can see how that volume has been decreasing. The buying interest in the marketplace has gone down from these earlier days when we were, before we saw any of these distribution things. It just looked like we were on a rocket to the moon. The narrative was that this was going to 220. I just remember that was like the number that me and my crypto homies were throwing around. Like, it's going to 220. It doesn't matter. It's going to 220. It's at 30,000 now, but it's going to 220. So it's really simple math, really easy to FOMO in. And you can see how, high the volume was because, there was a lot of interest when things were just on this huge surge and we had seen the previous cycles. So that has tapered off with each successive distribution and accumulation. That is actually what a distribution is intended to do, is to exhaust interest so that the price can be turned back around. You can take people that are just bullishly charging to 220 and over a period of ups and downs over several months can get it to a point where those same people are willing to sell back this precious asset sometimes at a loss. So that's what these accumulation windows are. And then we had the summer where we were really unsure whether that was the end of the bull run or if that was, the first top of a double top cycle, etc. And then we had the next little distribution that had the almost exact same structure, just at a smaller scale. And then that time, instead of breaking down like we did the first time around, back to the level of that first correction, which would be right here. So in this time frame, I expected that we were going to come back down here and do some more accumulation. Instead, we had a squeeze and a squirt all the way back up to all-time highs, and then a little two-top distribution. And now we're on what appears to be, a little bit of a relief rally. So here's my prediction, short term, and take this all with a grain of salt. I'm barely qualified to make predictions about what I'm going to have for dinner tonight, let alone what the market's going to do. So I could see this going one of two ways, and it's probably the one that we think is least likely that is going to happen. But I think that we are going to come back down. We're going to test this level, this $40,000 mark again. And depending on the news, which I think the news is kind of built into this, so it's not like it's a random event. I think that there is intent behind these things. But on Friday, tomorrow, we are supposed to be hearing a report on inflation in the United States, and if the Fed and the politicians have done a good enough job of sort of making people's fears less about inflation, that combined with maybe a few other little choice pieces of news could cause this to break support and come back down to some of these levels that we expected to see previously. But my main point is I think that we are in an accumulation. How far it's going to go and how long it's going to last, I don't know. We could come down as low as the places that we hit over the summer. It's certainly possible. And maybe start another kind of wider accumulation that takes us into 2022. So that's one scenario. And that's the scenario that I'm kind of thinking right now. If we did get another sort of surprise little squeeze and blast off, each one of these waves has been successively smaller in amplitude. So we had, big wave, big distribution, big accumulation, smaller distribution, little fake out, bigger distribution. But with the declining buying interest, it's hard for me to believe that we would have any kind of a parabolic moment. And my whole thesis that I was mentioning earlier is that we are in a transition in this market between the parabolic blow off top and then the slide into the bull market to what we did last time around, which is to have a little bit more structure on the way up, a little bit more structure on the way down. And now I think we are in a very structured, here's a distribution, accumulation, redistribution, little squeeze, another little distribution, accumulation, distribution. I think we're going to be getting into a place where the bull run cycle is less pronounced because the thing that everyone has wanted in crypto for the institutions to show up and really ratchet up the value of these assets, I think that has happened. And so every time there's an accumulation, there's more players that are getting into the space. And the more players you have, the more insulated these moves are, because now they're not just faking out retail investors. They're competing with each other. There's smaller moves where things are happening. Money is being made on 2 and 3% gains rather than 5 and 10% gains and losses. So that is sort of how I'm seeing this. I still think that we need to come back down, and that the best thing that we could do for higher prices overall would be to come down and have another larger accumulation that would build the cause to go higher. Right now, I don't really know who holds crypto with this big distribution, accumulation, and then a redistribution. There's a lot of sort of fragmented interest in this market right now, and I think that makes it really hard for there to be a cause that takes us up to higher prices. So to come back down, to accumulate, I think is what the market needs and wants to do. But that's just my speculation, and I will be the first to admit that I'm pretty bearish. I want to get in at better times when things are fearful. I'm bored, quite frankly, with these, returns back up to all-time highs, because the greed gets pumped up and we just don't see those kind of breakout patterns that would really take us much higher for me to be excited. So I think crypto needs to cool off. I think we need to all kind of shift our attention to other things for a while as well. And if that happens, then, after a little bit of a sideways accumulation, I think that sometime early next year, we could see another big run up, and maybe we could all be in some better positions for having, dollar cost averaged in during a point of fear. So that's what I'm looking at. That's what I'm thinking. But, we could have some huge black swan event that takes us all the way down to $20,000. We could have some crazy freak, surge like we just saw that takes us back up to all-time highs, and maybe, 85,000 or some of these other predictions before coming back down. But my main point is, in all of my scribbles here, that I do not personally believe in the parabolic concept. I think that energy has been dissipated. All of that fuel, all of this buying interest that would have gone into a frenzy has instead been very, skillfully woven through these different accumulations and distributions, and that eventually we will see a more mature type space. Let's look at the NASDAQ and how it moves. This is a market that's moving up with less volatility than crypto. It's just up and to the right with some of these, W patterns and different structures moving in. Let's look at an actual individual stock. Let's just look at what I have here. Let's just look at Apple. So this is also up and to the right, and there's distributions and accumulations in here, but they're not like what we just saw in crypto, right? I mean, these are on our way up and to the right. Here's a distribution. Here we've got some accumulation, distribution, accumulation, distribution, accumulation, and then distribution. So yeah, that's what I think we're eventually getting towards. And yeah, we don't need to see any more of this like ratchet up 1,000% and then a crash down for months and months and years and years and years. I think that we can just kind of get to a place where there's enough players in the market doing what they do, and maybe the gains aren't as extreme, but the risk will be lower as well. So some last thoughts here, and I know I'm going long. It's been a while since I put out a video, so I guess it's okay that this is a little bit on the long side. I just want to talk a little bit about Wyckoff in general, and I see so much TA now that involves Wyckoff, which is cool, because I think it gives us a why behind these moves that's a lot more, I don't know, it's a lot more helpful than just the crazy narrative that we get on YouTube and everywhere else, the diamond eyes, the laser hands and diamond eyes kind of sentiment. But I just want to point out that there is no magic diagram that is going to just show us what happens next. Wyckoff is not a predictive model in that you can just look at the schematic and know exactly what's going to happen next. Then there's a ton of schematics. There are, for every schematic that breaks down, there is a complementary schematic that can break up. And so I don't think that our job as crypto traders right now is to just be trying to interpret these schematics necessarily. I think that it is far more important for us to understand the psychology behind these moves, and to just check ourselves and to check in with the fear and greed index, and to just have an emotional awareness of the market and where we're at. If you're scared and you are feeling your finger over the button to sell all your bags, think about why that happens in these patterns. And if you're feeling super bullish and super greedy, you think this thing's going to the moon and that it's going to take you and all your dreams with it, be thinking about that too, because those moments happen quite often at the worst possible times if you're not able to see the man behind the market, the composite man that is just doing his job, just going through the motions, buying stuff cheap, selling it expensive, turning it around, buying stuff cheap, selling it expensive, over and over and over again. So yeah, just getting familiar with this, getting familiar with yourself and how you react in these moments, and spending the time to actually get out from the crypto circus, get some fresh air, and to invest your value in the places in your life where you actually want to see a return. I can't stress that enough. That has been so hugely important for me this year, to realize that this is fun. There's money to be made. There's people. There's all of these interesting projects. But there's a whole world out there. So over the weekend, I went up into the hills with some friends and had some pretty powerful experiences. I'm still mourning the death of my friend and just the shattered illusions of life being a certain way. And I invite you also to get up, get out, get away from the computer, go see the world that's happening out there right now. It's an interesting place. In the hills where we were, everything is recently scorched from the fires. Everything is so dry, and you can feel this planet just changing under our feet, and us changing with it. And so to take that time to step away from your computer, from this type of crap, and get out there and see, even in all of the apparent ugliness, there is still this beauty and a way to find a balance with the world as it is unfolding. And so, yeah, that's more in line with Uncomplication. It's hard to find Uncomplication when you're scribbling crap all over a charts and thinking about your own interests. But when you get out and just sit and feel the wind, feel the air, enjoy the people around you, and see that with every falling of a tree is also an opportunity to create something new. So I will leave it at that. Thank you all so much for tuning in. And until next time, you can support the Uncomplication channel by leaving something in the tip jar. You can get a shirt or a cool mug or a hoodie at the Uncomplication shop. And stay tuned for more with Josh and FOMO Nomo in this video series I'm excited about. But until next time, cheers, y'all.